Welcome back to Successful Living. I can't believe I'm saying this, but 2020 is coming to an end, which for a lot of us might actually sound like a good thing. But when it comes to taxes, we want to make sure we're prepared as the tax year draws to a close. So we're going to welcome in Greg Pucaro. Greg, welcome. Thanks for joining us again.
Nope. My pleasure, Rob. Good to see you.
So, Greg, I know, this year has been a little different for you, obviously, with the pushing of the deadline and a lot of different credits and loans, but I want to kind of get to the basics right now for, let's call it, our business owners out there and kind of addressing it, saying what are the things they should be thinking about as the year-end approaches?
Of all the years I've talked to people about tax planning, Rob, this is definitely the year where you can't sit back and say, I'm sure everything's going to be just fine, based on 2019. It's really important that everybody, business owners and individuals alike, take a look at their situation well in advance.
Okay, so what are some of those things? And I know we're going to get into some of the more specifics, but anything in general that, let me ask you this, is before we get into what COVID has done to our business owners, what should business owners in general every year be thinking of at this time of the year?
Well, I think business owners are somewhat accustomed to paying attention to what's happening, in the fourth quarter, how the year went, planning for possible year-end acquisitions of equipment, all kinds of items. That's routine. This year, there's too many other variables to even look at it from that routine perspective. And even individuals who typically might feel they're not in as much control, so to speak, because their tax situation is driven perhaps by just a W-2.
Yeah.
A lot of things changed, as you pointed out. For individuals in particular, they got to be wary of the fact that they may have collected unemployment through the federal's, additional unemployment payment of $600 per week. And we've talked about this before, I believe, on our show, that's taxable. Many people did not have taxes withheld during the course of going through, collecting the payment in addition to what they were getting from the state. So you could be looking at a significant amount of taxable income with no taxes paid. And it's good to have a hands-on approach to that now, so you're aware. So that's one big potential problem. And I'm very fearful we're going to see people who didn't take that into account.
Right, because not a lot of times it's, it's not that easy to maybe do the withholding or pay estimates or whatever it may have been. Or someone may have just said, listen, I need the money this badly. I'll worry about taxes later.
Exactly. And I'm sure many people, that's how they felt, and understandably.
Yeah. So what other stuff on the individual side should they be aware of this year?
Well, then, in many cases, we could look to 19 as an indicator of what might happen in 20, but that's not really necessarily true. So there may be families whose kids didn't go back to college this year. So last year, 19, they might have gotten tuition credit, for example. That might have helped get them over the tax hump. And this year, they may not have paid any tuition. Therefore, that credit would be gone. And that could be up to $2,500 per student.
Wow.
Some people might have had a mortgage deferral. So they weren't paying mortgage interest for 5 or 6 months or whatever period of time they were able to negotiate. Therefore, their mortgage interest deduction would be less. And assuming they were itemizing their deductions, that's going to affect their taxable income as well. So those are things they may not have been thinking about because we were all adapting to what was going on while it was going on.
Yeah. Now, what is the best thing for someone to do? I think the big thing is, I think what you're saying is maybe you can't do anything about it right now, or maybe you could pay a little bit early, but you want to make sure you're prepared to pay that tax bill, correct? That's what the real anxiety is, / what's going to be different is you're going to get some credits that are no longer there. You're going to have income possibly that you didn't pay taxes on yet, and that's just going to drive up how much you owe in taxes, and then you're not going to have the money possibly when April 15th comes of next year.
That's right. So that's there's a dual issue there. Some people might thinking they're still getting the refunds. A lot of people plan on the refund.
Yeah.
And not only will you not get a refund, you might actually owe some money. So it could be a double-edged sword in that regard. So it's really important to be aware. Again, there may not be anything that you can do, the economic situation being what it is, but being prepared for it mentally in some cases, if not fiscally, is very helpful.
Yeah. Well, I'd like to change it now, go back to the business owner a little bit, and I'm going to kind of ask you a few questions around the PPP loan and also some other credits that COVID has created. But to start out, the famous PPP loan, I call it famous just because everyone was talking about it when it went out there. Now there's kind of that forgiveness process, so first of all, are they done giving money out, number one, and number two, how is the forgiveness process currently working?
Well, as soon as being done, giving money out, unfortunately, as you know, Congress has been pretty lax at trying to come up with a bipartisan stimulus deal. And it's amazing. They talk about trillions of dollars now like it's nothing. So it's
Yeah.
kind of scary. But so I don't know what's going to happen, whether we'll see any more money in 2020 at this point. As far as the forgiveness process, that started in August. Many banks still aren't prepared. Or let me rephrase that. It's not that they're not prepared. The rules haven't been finalized. So therefore, they're basically waiting to make sure they know what the rules are before they start accepting, or more importantly, processing forgiveness applications. But many banks are now allowing you to submit the information so you can begin the process. Fortunately, it's not that time sensitive. You got up to 10 months after your covered period ends. So most people could wait until after December, which might not be a bad idea because, like I said, a lot of the rules have not been finalized.
Okay. So you might be, someone might be nervous saying, listen, I don't know where to go with this, but it really hasn't been pushed out there, that forgiveness process. That being said, if it does get forgiven, is it going to be taxable or not?
So this is what's really complicating the tax planning for business owners and even self-employed people who may have gotten a PPP loan, for example. As it stands right now, the IRS concluded a couple of months ago that the expenses covered by PPP loan money are not deductible, which in effect renders the PPP loan taxable, which is in direct contradiction of what Congress intended. So I personally think I don't agree with the IRS's conclusion, and I don't want to get into the details as to why, but I do think there was an alternative, a supportable alternative view that they didn't take. So if you can imagine having to pay tax, I think the average loan was around $150,000, for example, paying tax on $150,000 in income that you actually don't have because you had to pay it out to your employees, cover your rent, cover your utilities, et cetera. So you don't have the money. 20 might not be the best year in business you ever had. Some people did do well in 2020. And now you have to pay tax on that. And depending on your overall tax bracket, you could be looking at a $40,000 liability on $150,000 and you don't have the money.
Right.
So I'm very optimistic, and I've heard from others that there's a good chance Congress will eventually get to work and fix this. But as of right now, we got a 2-tier plan structure going with people saying like, here's worst case scenario, here's best case scenario, just so they're aware of what could happen in the event Congress doesn't fix it and people aren't willing to buck the IRS's conclusion, regardless of whether it's correct or not. So that's a whole complicated problem we're wrestling with now.
So I guess we'll wait and see on that one. Now, there are some credits out there that you talked about that COVID-19 has produced. And just to make our, business owners once again aware of those, I think one is the employee retention credit. Can you tell us how that works and how you determine if you qualify and how you claim it? How does that one work?
So we haven't anyone that I know of actually used this credit, but it was intended to provide a credit to employers that kept in people on the payroll, even if as long as their revenue was 50% lower than it was in 2019, the government would give them a credit up to $10,000 per employee. So it was a sizable credit, but your business had to really be somewhat decimated by COVID to qualify. And many businesses in that situation couldn't have survived with a 50% reduction in revenue, even if they wanted to keep all the people on the payroll. Now, there may have been an odd, like 1 or 2 people you would keep in a situation like that.
Yeah.
And if you got the PPP loan, you couldn't use this credit. So the PPP loan was definitely the focus for most small businesses and large businesses too, so I didn't see a lot of use of this credit.
Okay, all right. So which one have you seen a lot of use in? What credit that's out there?
The one that it was the paid sick leave credit, when it came out in the CARES Act in March, I thought this is great, but how's it really going to play out? Back then, we didn't anticipate that this was going to go on for months and months. I will tell you from personal experience, we've had 3 employees who could not come to work because they had a symptom or were exposed to someone with COVID, had to take time out of work to get tested, wait for their negative test results before they come back to work. This credit provides up to $500 per day, up to a $5,000 maximum credit for 2 employers that pay their employees while they're waiting, in effect, for their hopefully negative COVID results. So it's a great credit. I feel like it's overlooked. It's easily processed through payroll systems. So paychecks, ADP, that when you call in your COVID hours,
Yeah.
you get an immediate credit. So not only is it a credit, it's immediate. So whatever you owed for payroll that week is lowered by the amount of credit you were entitled to based on the employee that was out that day or week. Now it's limited to 80 hours.
80 hours per
which is
employee?
per employee. It seemed like a lot at the time, but
Yeah.
it's not necessarily a lot because it's so easy to be exposed and potentially have to go, for testing. There's another, that credit is, basically watered down a bit if your reason for not coming to work is because the family member has a COVID problem. So you're
Okay.
waiting for a child, for example, to be tested or perhaps can't go to school. That's only $200 a day, up to $2,000 in aggregate. Still better, certainly, than no credit. So the credit is very useful. I'm afraid that it's not being considered often. And I think especially we get into the winter with flu season, we're going to have people who maybe have the flu, don't know, have to find out whether it's the flu. So they're going to be people having to take time out of work for testing to make sure it's safe for them to come back to work. So I think it's going to become more utilized in this, the winter flu season.
Yeah. As I want to ask you one more question. I know we're kind of getting to the end here, but if we kind of have small business owners out there and they're looking at this and they're thinking, listen, my payroll company didn't do that, and my tax guy, I'm not sure, is aware of that. What do you tell them? I mean, should they kind of start making appointments now with their CPAs and get in there and try to pre-plan a little bit or figure out some of these credits?
Well, I definitely think so. And IRS.gov and the taxpayeradvocate.irs.gov are two websites you could go to that have great information, presented in layman terms with excellent examples.
Yep.
And one of them, the Taxpayer Advocate, actually has a tool so you can kind of conclude whether you're eligible for the credit and what it will be. Again, most payroll services, they don't actually, you have to tell them you have a
Right.
COVID person.
Yep.
So it's not really kind of their responsibility, but definitely you got to be very proactive this year, Rob,
Yep.
to see what things are, not only because of the tax planning, the typical, it's because you need to preserve cash. You need to be ready for what might come next,
Yeah.
as we get into the winter months, so to speak.
That's a great point. And, we want to thank you again. Always you give us some great information, and we look forward to seeing you soon.
Likewise. Thank
right.
you.
All right, when we come back, we are going to talk about budgeting and how it can lessen our anxiety. We'll be right back.